Mr. Venkataraman, thank you so much for your time. Before we talk about your Q3 earnings, tell us what your take on the budget has been. Do you believe that more disposable income in the hands of people will boost consumption, especially in urban areas, and in turn do well for your business?
Very much. And I think that is the underlying reason for that decision of the government. And it's a welcome decision. And I'm sure it'll have a multiplier effect on the total consumption from all those people.
Help us understand the impact of US-China trade on your business and what percentage of your watch components and eyewear they come from China, and how will this impact your exports, if at all?
It's not a material thing in our company's context, and we'll have to wait for it to unravel completely before I can comment on that. But it's not a material item in our life.
Jewelry revenue growth of 25%, but the margins were under pressure to 9.5%. Could you elaborate on the key factors impacting margins and whether the reduction in custom duty had a significant impact?
The customs duty had I think about 550 crore estimated impact when the announcements came in July. And it is by and large played out to that extent. And it's also now completely behind us in the Q3 of FY25. So going forward, that effect will not be there. That was a big dampener on the total margin of the business and of the company. To some extent, the rising price of gold and the pressure that puts on the diamond jewelry margin, and the gold jewelry business and the coin business is growing more than the diamond jewelry business, even though the diamond jewelry business grew well. Those have a bearing on the margin as well. And those parts are part of life as the price of gold continues to rise. But the big contributor, which was the customs duty thing, is behind us, and therefore we can look forward to a normal life from Q4 of FY25.
When it comes to your guidance, you have maintained your jewelry margin guidance at 11 to 11.5% in Q2. Now, with the outlook, you revisit that to 11.5 to 12.5% that was guided earlier. Now, with jewelry reporting strong performance, would now be a good time to revisit this guidance?
We spoke at reasonable length on this on the call just a while back, and I would stay with that view that Ajoy had shared in that call. And we'll revisit it at the appropriate time.
Sure. While analog watches have done well for you, your wearable segment is under pressure, as we understand. Going forward, will your focus on this segment be on watches, specifically analog? And can we expect to see some new mid-range priced launches as well?
While we declined about 20% in our wearables business in Q3, but it was still markedly lower than the decline that the category saw, some of the other players saw. Because of the relatively stronger value propositions we've been able to build, not adequate yet though, and the strength of our brands, Titan and Fastrack, and our distribution. We still have to gain complete grip on this business. We are, it's certainly taken us some time because of the late start in this business. We are just about 3-4 years old, really speaking. And we expect to do much better from a foundation point of view in calendar 25. And I'm sure we'll see the results in the second half of calendar 25. But the analog business is booming. It's very strong on top of a steady and continuing pipeline of product innovation, retailing and marketing strategy through which much customer excitement has been created at all ends, but particularly in the Titan brand across price points.
So eye care revenue segment was up 16% with a notable 50% increase in EBITDA. Despite this, the company has closed 3 Eye Plus stores in Q3. What is the total number of store count and what is the outlook going forward, especially in the sunglass segment?
The store count is, I think, just a little under 1,000, if I recollect. And the four-pronged strategy that we had rolled out about 1 year back. Those four strategies are playing out very well over the last 3 quarters, and the foundations are strengthening every quarter, and that's the reason behind the Q3 performance. Sunglasses included, but it's also in affordable fashion, affordable progressive lenses, international brands, and we are a unique company selling international brands in our Titan Eye Plus stores. All these various parts are powering the growth, and we expect the same thing to continue for the next many quarters.
And also, can you give us the outlook on the lab-grown diamonds? Now, your studded segment has done well in Q3 once again, but does this ease off some concerns around the lab-grown diamonds overshadowing the natural diamonds? Now, if we see some of the other companies in the group, now Trent on one hand has forayed into this particular segment. Tanishq has recently collaborated with De Beers to promote natural diamonds. What's Titan overall strategy on lab-grown diamonds?
I will talk about that strategy at the appropriate time. At the moment, I have nothing really to share on the strategy. Of course, there is a lot of news about LGD, and the actual conversation in our own stores about LGD is much lower, compared to the visibility that LGD gets. Obviously, there are a lot of players in it. There's a lot of promotion, talk, store setups and all that. But Titan Company's own strategy will be revealed at the appropriate time. I had spoken about Trent, I think, in the last call. Trent is a big box retail company which sells multiple categories. For example, they sell perfumes, they sell women's bags, they sell salwar kameezes. Titan Company also sells perfumes, women's bags, salwar kameezes. And the fashion jewelry using LGD is another category that Trent has got into a few months back. So that's the background to that. Titan's own strategy will be revealed at the appropriate time.
Right. Mr. Venkataraman, great to have you on the show. Thanks for highlighting your earnings. We're going to take a very quick break on that.